All right, everybody, in light of the decent chance that the S&P 500 or the stock market in general is going to pull back, a lot of people want to know, what do you do? What can you do if the stock market pulls back? A lot of people just get out of the market altogether. They stop trading. They might do some mitigation type of tactics. They might even move their money into bonds, corporate bonds, which is not a bad idea actually. I hold corporate bonds. Okay. But a lot of people just stop trading. There might be, some people might short some stock here and there, but shorting stock can be. There's some options, tactics that can be done, but how do you go about, you know, what should we do, if anything? Should we just get out of the market? So let me just tell you what I'm doing, what I've already done. Okay, in front of you, I haven't traded futures in quite a while, probably 6 months, a year, maybe longer. I've traded everything under the sun: options, futures, stocks, bonds, you name it, forex. I've traded it. So, in light of the fact that I believe there's a really good chance the stock market's going to pull back anywhere from 100 points, maybe even as much as you know 500 or 600 points. Okay. Um, I don't know if that's going to be right away. It might be a week or two or three sometimes before it does the big pullback. Okay, sometimes it happens within a few days. Okay, but I think we are going to get a significant pullback. Okay, coming really soon. How soon exactly? That's important, but it's not super important. As long as it doesn't get really far out into the future, then generally speaking, we're going to be okay. Because obviously timing is important, right? So in front of you, we've got the S&P 500 futures, but to be specific, you'll notice this is MES. This is known as the E Micro S&P 500. So if you've never traded futures before, guys and gals, one of the great things about this particular futures product, the E Micros, is the initial margin, upfront margin requirement is fairly low. On this one, I think it's a little over $1,200 per contract. I'm not going to dive too deep into futures contracts and specifications and all that. I'll leave it up to you to go do your own due diligence and research, okay? But so what I'm going to do is, and what I've already done is, you'll notice right here on the screen on the right side, is I took 3 contracts. I shorted them, okay? I shorted them at $4,331.75. Okay, the amount doesn't really, the exact price is really not that important, as long as it's really close to where I think the market's going to start pulling back. We should be okay. If not, then guess what? If I get it wrong, I'll have to close the position, cover my shorts, and move on. But this is how I would probably go about with a conservative small position, because 3 contracts is fairly small. Okay. This is just how I'm going to do it. Again, guys and gals, I don't give financial advice. I'm simply sharing with you what I do. Okay. So this is how I'm approaching my belief that the stock market is going to pull back. The S&P 500, you could short the SPY. That's one way of doing it. Okay. I prefer to use futures contracts because there's a big leverage advantage. Okay. Huge. The margin against the futures is far less margin needed for futures contracts compared to, say, the SPY. A lot less. Okay. So that's one of the reasons why you see me trading futures. Now, that's the big benefit to futures. Plus, you get a multiplication. I think it's 100 shares per contract. So basically, I'm trading 300 shares here. So those are the big pluses. But the drawbacks are there is an expiration date, just like in options, on futures contracts. So that's important to remember. Now, this particular contract, you'll see up there, I'll put a circle around it, but basically you see up there in the upper left, it says September 2021. I think the contracts expire September 17th is the last trading date for these contracts. Okay. So yeah, I'm throwing a little specifications and a little bit of knowledge about what future contracts are. But in any case, basically in a nutshell, I'm shorting S&P 500 contracts using the E Micro product. Far less leverage. I don't have a big exposure. I'm just doing 3 contracts. Okay. you can see, I don't know, at the time when I take the screenshot here, you might see I'm up or down a few bucks depending on how the market's moving here while I'm doing this video. Okay. Now, with futures, excuse me, with futures, I mean, this is a fairly small position, so I'm not too, I don't have to like eyeball it every minute of every day. But with futures, you really got to pay close attention, a lot more than you do with stocks. Okay, you got to stay on top of it with futures a little bit more. Okay, especially if you take on, a fairly sizable position. But in this case, I kept it small. I went E-micro contracts instead of E-mini because the E-minis, in my opinion, are ridiculously expensive. I don't know why anybody would trade that ridiculous product unless you just have buku bucks. Okay, they're like $12,000 a contract for initial margin. That is so stupid. It's beyond belief. So, I don't know many retailer traders myself that trade the E-mini because it's just become too expensive. It's nuts. So anyway, the E-micro is 1/10 of that. That's so instead of $12,000 initial margin per contract, it's $1,200, at least on the TD Ameritrade platform. Other platforms, brokers have maybe slightly different margin requirements. Okay, so there it is, guys and gals. That's how I'm going to deal with taking advantage, I believe, of the market that's going to pull back. If it goes up 20, 30, 40, 50 bucks, I'm not sweating it too bad. We're going to give it a little wiggle room here. We'll let it go up and down a little bit. If it gets too far up, obviously, everybody has their own. You have to know your own risk, guys and gals. I kind of know where my risk tolerances are. If it gets a little out of control, then I'll put my stop losses in and just take it from there. Okay, so just want to share with you, I do believe, one more time, that we are going to get a pullback in the stock market. The way I'm going to play this is E-micro S&P 500 futures, taking a smallish position, 3 contracts. I traded them short, and I believe this is going to be a good trade. I hope it is. Time will tell. That's how I'm going to play it. I hope you guys have a great day. I thought I'd just put this video out again. I don't only do 2 videos in one day, but I really felt this was important because I think this is the way to play the market. Hope you enjoyed the video. Don't forget to subscribe. Click that bell icon to get notified of all the videos and give me a thumbs up. I really appreciate it. We'll talk to you all again real soon next time.